All right, good evening, everyone. Welcome to the trade findings and adjustments for Tuesday, the 26th of November. Thursday is Thanksgiving. The market is closed, so we will not have a Thursday trade findings and adjustments. You guys enjoy Thanksgiving in whatever part of the world you're in, but the U.S. markets are closed, and we're going to take the time off. With that said, let's talk a little bit today about Target and what I've done. So on Target, we got out. Target, we are done. Today, let's see if I can get some Target. Give my screen just a second as it fills in. I've got 3 or 4 or 5 years worth of stuff. Okay. Give me one more second, please. Come on. So what I've done is I exited, for most people, our Target trade if you were in it. And there's a particular reason why. Exited Target as we've had an incredible run up. And yes, I'm still bullish on Target, but I don't like the chart. When I see the movement from, get a highlighter in here. When I see the movement from 80 up to 120, 125, 126.89, it's gone too far too fast. It's over a 50% gain in Target since August. And you can come back at me and say, hey, but what it does is it stays in a range and it keeps going higher. Stays in a range, keeps going higher. Kevin, is going to stay in a range and it's going to keep going higher. But I'm going to politely disagree. I think it's run over 50%, so there's a crap load of sell orders at 127.50. There's nothing that Target's done in the last 4.5 months that have justified a 50% gain. It's just way overvalued for a retailer. And it's been a nice run, but I don't get it. I don't get it anymore. It's no longer justified. The valuation is ridiculous. So I'm out. But I'm out of Target with the understanding of the fact I could be wrong. So here's the short answer. Sold at 27.25. For most of us, I don't have everything, but we got some that got in at 105, some that got in at 95, some that got in at 107, 107.97, some that got filled at 79.95. That's everything. To sell out at 127.25. I like where we're at. We basically have a $20 run up. You need to take out $4.30 for some, what am I trying to say? I'm a little tired. I do apologize. You take out $4.30 for a long put. You add back in about $3 of credit for some covered calls over the time frame that we've had them, and really you're booking over $20 a profit. Roughly $20 a profit would be the best way to say it. So when I run into an opportunity like that, I'm good. I'm totally good. I think I've done a good job of managing the money, and it's time to pull the trigger to say, hey, I'm out. I guess for me, it was common sense. It was common sense that I've got a profit, and even though it still might run into an earnings play, right? An earnings event. I'm going to make enough on it. I'm going to make enough that I'm going to be completely good. I'm going to make enough that I don't need to stretch it out for the what ifs. Now, with that said, in fact, I should put this in there. So I've made enough $20 per share, roughly, and even more on others. The stock is fully valued, and even then some. 50% run up without justification and overbought. But here's the question. Could I be wrong? Could I be wrong? No one's answering if I could be wrong. That's awesome. Which means I'm right. Of course I could be wrong. There you go. There come a couple of you. Of course I could be wrong. I don't know if you're wrong, but I'm always right. You know, yes, of course I could be wrong, right? Kevin, no one's always perfect. Of course you could be wrong. So what do you think I've done? If I could be wrong, what do you think I've done? I like it. Yes. I probably have went, I'm sorry, you took a good direction to exit the trade, so you never go broke from breaking a profit, right? I like the answer. Never go broke from taking a profit. But if I'm wrong, why not play with the house's money, right? If I'm wrong, I could miss a pretty big run up to the upside. I get it. Kevin, you could be horribly wrong, right? I don't know the future. I could be wrong. I could miss the fact that the stock still has a huge upside run in it. I could be missing the fact that the target still might go higher. So one thing that I have done is that I have taken the opportunity to, come on, internet. I have taken the opportunity to take some of the profits and go back and add just some leap calls. Now we had 3,500 shares. We had 3,500 shares. Hey, I could be wrong. As much as I think Target's overvalued, I need to look at the understanding and the perception of seeing both sides and saying, but that doesn't mean it might stop going up. It should stop going up. Fully valued, 50% return in the last 4 months. I did not catch it that whole time, but part of trading is looking at it and going, you know what? I could be wrong. I could completely just blow it. And Abraham, I like where you're going with it. Abraham's talking, he's making the quick point. He's saying, hey, your profit is your profit. It's not necessarily the house's money, Kevin. Remember that. He's going, hey, Kevin, remember, a profit's a profit's a profit, and it's still your profit. So don't necessarily count the house's money as not understanding it's profit. It's money in your pocket. Be smart here. And Abraham, I agree. It is. I understand where you're going with it, and I agree with you. But it's not my initial investment. It's the house's money. So because I could be wrong, even if I lost every penny of this, I would still have a profit on the other side. I went back on with some leap January 21 and January 22, $35 leap long calls. On the ones I put on today on average, I'm down. On the ones I put on a week ago, I'm down. But I still have the opportunity to continue forward in Target with a long time, 400 days here and 700 days here, with a long time to adjust, with a long time to add short calls or long puts on it, create a call calendar or a straddle. I feel like I have an excellent opportunity to continue to run with these guys into the future. So that, I'll be honest with you, I'm really not significantly worried about where I'm going to be or where I'll end up with Target. Does that making sense? What I'm trying to tell you making sense here? I'm playing with the house's money. I've made a significant return on the stock ownership, and I'm still in a position where, for all intents and purposes, if I'm wrong, I still have an excellent opportunity to fix the trade and to be okay in the long run. I think, for all intents and purposes, I'm in a position that I'm comfortable with and that I think I'm not going to lose any money. Yes, Abraham, you are correct. A profit is your money. It doesn't mean that you can't lose that money and that you can't be upside down. You are 100% correct. You definitely need to be careful. You really can't just say, hey, I made some money, so now I'm okay losing it. That is foolish. Agreed. But I like the position I'm in. I've just taken a huge profit, 500 to 1,000 shares in 4 or 5 different accounts, 20,000 to 10,000 profit on the stock. Little bit of it getting knocked down with some cost of long puts. We also, though, did run some pretty good covered calls against it. Booked a nice profit, and I'm back in for most people, $2,400. Sitting good. Sitting pretty. And I honestly really like where I'm sitting and where I'm at with this position. All right, let's see here. Some of you are still in AOBC. It's a trade we opened up a significant while ago. AOBC has their earnings coming up. I've got some with shares. I still have some calls. For those calls, we have shorted against them. We have, what else have we done? We've got our cost basis down to about 32 to 34 cents, if not 23 to 24 cents. For those that were in the call side, we're profitable by at least a 40% return. And I'm not interested in running straight calls through earnings. So if we went to my personal account, you would see that I've done pretty well on them. I have them here. I am looking to exit AOBC, and really, if I could, I'm probably going more to the high side, but I would really like the 55 cents. I would really like the 54 cents. But I would tell you it's time to exit AOBC. Book that as a profit, and it's a trade that we've been in for a while. In all honesty, it's a trade that, if you ask me, it was one that we adjusted. It's really kind of been a booger of a trade. I have not enjoyed AOBC in the least little amount. In fact, AOBC has been horrific. Didn't go the way we had planned, but I'm ready to be done with it. I'm not ready to run leap-long calls through an earnings event, and I want to be out and done with it. So I'm going to book the profit. Everything else, Bank of America calls, I'm out there in time. My Bank of America calls are January 35s. Baidu, I'm frustrated with it. My true cost basis is that 520-ish, not 337. Disney, about time Disney got some love. My goodness. If you remember on Disney about a month ago, I was looking at getting out of Disney at $16. Hey, it's okay to take a little bit of a profit. Some of you might come back and say, Kevin, you didn't get out of Disney at $16, which is correct. I did not get out of Disney at $16. I showed an order I was going to get out, but again, part of the process of getting out of Disney, right, is the fact that it showed an update, and I decided, you know what? Let's let it run a couple more days. I stand by my thesis, right? My thesis was, for crying out loud, Disney has $2 million movies, or $1 billion, excuse me. Frozen almost got there in what, a weekend? And they still have Star Wars. These guys have a multiple that's ridiculously low when you compare it to the other media companies that are doing what they do. And so my thought process, again, one more time, my thought process was, well, here's where I'm at. Here's why I'm here. And let's, maybe I'm going to hold on a little bit longer. Could have got out at $16, and I think 65 or 85 cents. But Disney right now is sitting at 22 bucks. Well, Kevin, you changed it. And the short answer is, dang right I did. I totally changed it. to be 100% honest with you, I changed it like there was no tomorrow. I had an up day the next day that I had the order in, so I took the order off. $16.85 was not enough on a $13.85 cost basis. So I went with my gut, now sitting at 22. And really, now that we have Disney over that $850 range, I really think it can go to at least 155, 160. And the short answer is people are seeming to be able to pull their heads out. They're figuring out that there's more opportunity in Disney, and it's taken a while, but it's just common sense that it's like, hey guys, for crying out loud, Disney has all this ridiculous upside. Run with it. For crying out loud, run with it. Run Disney, run, right? That's the short answer. We're doing everything we can to run with Disney for as long as possible. And I'll be honest with you, I'm greedy. I want 100% return. I have sat in those leap long calls for long enough. I want 100% return. Long run, I think I've got huge opportunity on Disney. I think I've got a ridiculously long run on Disney. I've got a ridiculous runway on Disney. So why not let those winners run? Why not let them run? Why not make an attempt to make as much money as possible and see if we can't get 100% return. That's my thought process on Disney. I'm being greedy. I'm being greedy, and I'm going to let something run as long as I can to hopefully make an absolute killing on Disney. That is 100% where I'm trying to go with it. And I like my opportunities. Ford versus Ferrari, great movie. I've already dollar cost averaged. I really need to go back up to $9. If this goes down to a 45-cent range, it'd be a great trade to jump back into. It would be a great trade to dollar cost average again for me. Ford between now and January 2021 in the next year should bounce higher. It doesn't mean that it's going to. The woulda, shoulda, couldas, right? It should bounce higher. So if it should or could bounce higher, I want to be part of it. I want to be part of it, and it would be a great trade to be back in. If you're looking for a new trade, that would be a great trade to get back into. Couple questions came up. Are you going to use Disney as a cash box? Maybe. Bull calls and bull puts. You could use either one. I do think you can do an in the money bull call or an in the money. How would I say it? An in the money bull call or an in the money. Okay, so I'm going to contradict myself. An in the money bull put or an in the money bull call, still playing it bullish, gives you a better probability of making money with Disney. So the short answer is an in the money bull call, an in the money bull put. Even though I think it can go to 160, you got to play your facts that you could be wrong. And I could be wrong. It might not make it there. So an in the money gives you a better probability of being profitable. And if you don't have the money for leaps, definitely just take bits and pieces of the wave. In fact, that's going to bring me up to Facebook. Facebook, I really like where Facebook is at and that it's getting back above 200. I wish it would hold it. I'm frustrated as all get out that Facebook just can't seem to hold 200. A great trade to be back in is Facebook. Run into Facebook. But your key point is 197-ish. Where is it at? A key point, if I was looking for an entry point to get into Facebook, uh, 196, 197 would be where I'd be looking to get into. A question, someone asked me about Under Armour. And where's my Under Armour at? Under Armour, find Under Armour. I've got a lot of Under Armour. I've got so much Under Armour that I'm Under Armoured out. Kids are getting Under Armour for freaking Christmas. It's nice to see we got a bounce off of the 1750. Yes, you could look at an Under Armour trade and jump into it. I really do like Under Armour. I do believe it should do well through the Christmas season. Got a crap load of it for kids, for sports. It's only going to go up to $19.20. So you're going to play a small range in Under Armour as you're waiting for it to break some resistance. And it probably will not break resistance anytime soon. To be 100% honest with you, Under Armour is not in a position to break resistance without another earnings event, and it should not break its resistance running into the Christmas season. It's going to need some earnings to push it higher. So an Under Armour trade into the next month would be a smart trade. You're doing nothing more than just playing the season. Great opportunity. Definitely go run Under Armour into the Christmas season. But understand you're only going to be looking at $19.20 on the upside. So you've got 18, you've got $1.21 to base your trade on. Rich, if you're going to look to do or run a bull call, definitely look to giving yourself the a short-term pop, and you're looking at 1/4 to 40 cents as your profit. So why not look at it, right? We're here for crying out loud. Let's look at it. You're like, Kevin, December, January 3rd, give us a little bit of time past the event. There's a trade I would do right there. I would look to Under Armour. This would be a pretty darn good trade. In fact, that's even when I can afford my account. I would really want to be getting in that 51, 52 cents range. But there's your trade. There's your Under Armour trade. It's cheap, $510. A 20, 30, 40 cent profit. And you're out. And you know what? Great trade. Let me go through and see. I really like it. Yes, I would like to take credit for it, right? But let's give that credit to Rich. And yeah, that's a good one. I would choose a January 3rd for just a little more time to allow it to run up to resistance. I'm going 1950 above the our stopping price. I really, really like this trade. Sold. In fact, the neat thing is if I could get out of AOBC, it pays for a portion of it. Now you've typed a couple things in. Kevin, out of curiosity, no. Kevin, out of curiosity, would you consider trading Uber, Lyft, and BYND? As I say, the quantity of management, they're all in a sure growth market, so I'm in doubt just about how you might. I wouldn't trade any of them because I'm going to disagree with you that they are in a sure growth market. It's my opinion that I think they're running into, at least here in the United States, they're running into issues with the cities by taking away the profits from the taxis. So I don't see a sure growth. In fact, they've had some pretty serious issues in regards to getting along with the cities. Uber and Lyft have both had issues with drivers. I don't see it. I don't see the catalyst or the growth upside for these companies. These would not be an area I would want to be concentrating money in right now. I couldn't and wouldn't want to do it at these prices. I don't find the prices attractive to me here. So because of that, I would not be, I just don't see it. I don't see Uber, Lyft, or any of them. But again, that does not mean that I'm right. I just wouldn't be committing more capital at this point. I don't see the opportunity for them to be significantly higher. Any other questions you guys have? Rich, earnings are on the 11th of February for Under Armour, but the earnings event is too far out. That's why I'm only going as far out as I went. The earnings event's just too far out, so I'm looking at trying to play Under Armour just for the Christmas season. That's where I might define the sweet spot, right? The sweet spot for me on Under Armour, Christmas season. Where can I run into the Christmas season and get a nice profit on Under Armour? And so that's how I would be playing Under Armour, not necessarily looking at an earnings event to be placing a trade this early, if that makes sense. The time frame for earnings out in February, I don't think is relevant to help you in November, but I think more relevant during this time period would obviously be the Christmas rally and I keep forgetting it, and or the Chinese, I wonder if I'm overpaying at 55, or the Chinese trade talks would be something that I would find pretty interesting there. And I'm going to put it out there, but the short answer is I'm going out to a January 3rd. If you look at this account, queued, where's mine? Under Armour is a January 3rd. Well, let me put it in here for you. Under Armour. Pretty sure I took a screenshot of it. So I do apologize for being a little scatterbrained, a little tired today. I'm a little scatterbrained, a little tired. 6 days in a row I've been up. 7 o'clock at night. There's the trade right there. 7 o'clock at night, running out to 9:30 in the morning. There we go. Call vertical. Great opportunity on Under Armour. Again, credit goes to Rich Mormon for pointing it out and saying, hey, check out this trade. Great trade idea. I like it. Check will come in the mail to you. All right, guys, I'm going to run on you. If you can think of any new ideas, or if you wouldn't mind sending me an email. This is the first time I'm going to be going live with an advisory and charging money for it. Please feel free to give me some comments on thoughts, ideas, I'm all ears. I'm all ears. I'm not going to pretend that I know better than someone else. So if your thought processes here can help me out and make things better for you, I greatly appreciate it. Send it my way, and let's see if I can't make these better for you in regards to what I'm seeing and ways that I think I can do a better job for you. Give it to me. I'll take it. I'll see if I can't do that. Can't spend my time making sure that I get things that'll be obviously more helpful for you guys. Appreciate your time today. I do hope this was helpful for you, and I look forward to seeing you all next week. Good night, everyone. And Ida would not put it out to February earnings. Yeah, put not out. Right, I'm not running it out to February. You only want to run it through the Christmas season. You'd be paying too much money and too far out in time to do a bull call now for an earnings event in February. So I would not be looking to run out in time and to overpay for the event that we're trying to get into right now, which is an earnings run, which is a Christmas rally run. That's what I would be looking for, and that's where I'd be attempting to play my run on Under Armour. And technically speaking, it's showing you it probably won't get above 19. It probably will not get above the 1920 range, as that is a 50-day simple moving average resistance level. So short-term trade, again, just trying to get 30 cents. If you get that 30 cents on it, you're going to be killing it. You're going to be sitting pretty, and don't need to get too greedy. All right, guys. Thank you. Good night.